Hey everybody, it's Shannon from Alphatrends.net. Today is Friday, the 7th of July, and we had a down week, which brings the month obviously in the same position because we started a new month on Monday. It was a holiday shortened week, 3.5 days, and we got some damage done here. Semiconductors pulling back 2%. Nothing really major to the downside, I guess, except bonds. They went back to negative on the year, down 48 basis points, and energy. Oil, that is the one that turned back around. So we'll take a look at that as well. But let's start, as we always do, with the S&P 500. As I mentioned a couple weeks ago, this is where we had purchased the S&P right here as it pulled back to the prior day's volume-weighted average price and began to rally. Took a third off on that breakout, took another third off on that gap higher, and then a third was stopped out yesterday at this point. And now I have no position in the S&P 500. We're holding on that rising 20-day moving average, and we're seeing a little bit of time frame confusion in that the daily time frame is still positive and solid uptrend is what I mean to say, not just positive, solid uptrend. A lot of people are calling for a double top in here. Remember that a double top is only known after it breaks below point B. This is point A, B, C, and what we see in between is a break of a trend line. That's one clue. And then when it breaks below this low, that confirms a double top, a true double top. This is just an area of supply in the same place. And as I mentioned in last week's video, that I always want to sell some into the breakout when it gets extended for this exact reason. The breakout chasers get involved and we see some profit taking, allows us to take a little bit of risk off and some, lock in some profit. So the S&P seems like it needs to settle down a little bit in here. This late day sell-off really got pretty ugly quickly, and so we dropped from basically 443 down to 439, and broke below the 2-day anchored VWAP, which had previously held in the morning. The Nasdaq, same story. We broke down in here as well late in the day. We want to take a look at the anchored VWAP off of this low, and you can see we're right on that off of this high. So this is a little level of interest that has the potential to become support. Keep in mind it's also the location of the rising 20-day moving average. I wanted to point out, by the way, I had teased this before, but the alpha dot, as I call it, is now available exclusively on TC2000 charts. That's the charts you see here, and that's I have a link to those charts in the YouTube video below, which reminds me, if you are watching on YouTube, please give it a like, give it a comment. I read them all and usually comment back. So this red dot here, this is where the market was 20 days ago. And what you can see is this blue line, that's where the market is 50 days ago. What I wanted to do was show two different ways of displaying this. So if we wanted to change the 20-day moving average to a line instead of a dot, that might be preferable because you see the exact day that was replaced in this 20-day moving average calculation. So in other words, on Monday, we'll get rid of this data, and this will be the 20th day, and replace it with Monday's data. On the shorter term time frame here, you can see, I've mentioned the 5-day moving average constantly, and I'm always clear that I never look at it on a daily time frame, only on intraday time frames. So this being a 30-minute time frame, you can see that the data begins halfway through this day right here. That's because we had a half a day on Monday. So this is truly 5 days of trading in the market, 5 full 6.5-hour days. And you can only get that accuracy with shorter term time frames. There's 1,950 minutes over the course of 5 days. So that means on a 30-minute time frame such as this, we use a 65 period moving average. 65 times 30 is 1,950. So we have the potential for some support in here. I think the market is telling us, just to go a little bit cautious in here. Listen to the message of the market. I had pointed out on Twitter, these were some of the swing trades on Alphatrends that we got stopped out of on Wednesday or Thursday rather. No, Wednesday. I'm sorry. So we got involved in Breeze right here, BRZE. This had made a higher high above the flat to rising 5-day moving average. It rallied up and broke this high, so we sold a third, and then we raised our stop to underneath this little low right here because that's the definition of trend. We had a higher high, and this looked like the higher low. It made a lower high and then a lower low. We got stopped out there before it fell apart. On average, took 3.4% gain, and as you can see, the stock was below where I had actually originally purchased it. Same is true with ACLS. Purchased it here, sold a third the second day, sold another third right here because that was a breakout. It broke to a new high, and that was time to sell a third. And then underneath this low is where the final was taken out. And, I want to hold these things as long as possible. My goal isn't to hold for 2, 3, 4 days. My goal is to listen to the message of the market, to manage risk along the way. And these are the types of trades I provide every single day for Alphatrends subscribers. You can see the same with Fresh. Bought it right here, sold a third, sold another third on the breakout, and then the final third as it broke this low, got out of the balance and maintained a 3.6% gain, which if you had purchased here and were still holding it, you'd be down a couple of percent. The one that we got stopped out of, we never got an opportunity to take a profit in, was Lululemon. This one broke a higher high above the flat to rising 5-day moving average. And of course, it takes into consideration the longer term time frames and the anchored VWAPs as well. This is just to simplify it. But we never got a chance to take a third off in this one. So as it broke below this low right here, that's where I bailed on the stock and had Alphatrends subscribers do the same. It was a 1.9% loss. And, as far as losses go, it was a good loss to take because the definition of trend that seemed to be emerging in here when it made that higher high was invalidated when it made the lower low right here, and it saved us from taking a much bigger loss. So that's the way I look at stocks each day. It's very similar to what I talk about in here, with the market each week. So again, this is where the market was 20 days ago. This was 50 days ago. I'm not sure what I prefer yet. I think I like the dot. However, it's easier to line up the exact day with the line. So I'm still experimenting with that and would encourage you to experiment and find the way that makes the most sense for you. The Russell 2000 is just stuck in this range here. It's a bunch of back and forth, really nonsense. It made a nice move here the other day. And then it broke down, same thing. It broke down, and now it's just, in my mind, it's a waste of time. It's just too damn choppy in here. So I'm not paying really much attention to it. The semiconductors give us a little bit of reason for concern. They've been the big winner all year, as we know. Taking a look at, again, they're up 47% still year to date. Bitcoin actually, of course, is the bigger winner. But as far as indexes go, ETFs that I cover here each day, now we're closing below the 20-day moving average. So here's how we would look at this. So on Monday, this becomes day 20. So that means if the stock, the semis are above this day, the 20-day moving average will continue to rise. However, on Tuesday, we'll be getting rid of this data, and this was the close that day, meaning if we're right here, well, that 20-day moving average is going to start to flatten out and decline. And then the next 4 days, we get rid of this data. If the market isn't able to get back up into that area, then we'll still see a declining 20-day moving average. And if we get trapped below it and then break support, I think you have the scenario for a 50-day moving average test, and that would not be, very good to see, obviously, for most people. You can see that's also where we see the anchored volume weighted average price from this low right here. That will be rising up to meet in that same general area as the 50-day moving average. So a lot of reasons to be cautious on the semiconductors here. We're still kind of digesting these gains through time, and that's a potential bearish scenario. And you can see that's the value of knowing where that 20-day moving average was 20 days ago. And so in other words, Monday we get rid of this, Tuesday, Wednesday, Thursday, Friday, and Monday of the following week, Tuesday the following week. There's a lot to overcome to think that this 20-day moving average will still be rising and that prices can stay above it. I think a likely scenario, not a prediction, but a likely scenario is something like this. And then we start to see a little bit of a breakdown, which if that happened, well, that would lead to bigger selling in the semiconductors as well. I'm sorry, the NASDAQ and the rest of these markets, basically. The biotechs, again, this is what I was telling subscribers. I don't buy support because we only know support after the fact. This market was down to the year to date. That's that thick blue line, anchored volume weighted average price from the beginning of the year in the 200-day moving average. People were buying it thinking that was support. Well, on Thursday, it gapped lower. Now, the scenario I was outlining is that it's possible, it's not, again, it's a scenario which hasn't played out yet, that if the biotechs can get back above this right in here next week and do something like this and then see that 5-day moving average flatten out, well, then it's possible it could break higher and maybe make a run for up towards 85. We're still below this prior band of support. But if the buyers regain control, what happens in here is the short sellers will start to reconsider their positions and they'll say, hey, let's cover that. Well, who are they going to buy that stock from? Well, a lot of the long holders who got stopped out in here might see the market begin to rally and they decide to get back involved. So the people who are buying in here and creating that support, if it rallies up to here, they're not likely to give up their stock easily. So from failed moves, which this isn't yet, but has the possibility of becoming, from a failed move, we could see a potential fast move, but really probably only up towards this level. What we want to look at as well is an anchored volume weighted average price off that peak. And isn't that interesting how that will come into this same zone in the next couple days, along with that declining 20-day moving average and that 50-day moving average. So this gives us a potential level. It's not a price target, but it's a potential level where the sellers might gain control. So if a scenario like this unfolded, maybe you would be a buyer right here with a stop under here. That's the way I like to look at the market and explain it every single day for subscribers to Alphatrends. I do this same exact video with all these indices every single day. Financial stocks, I still think they're a waste of time. In fact, let's talk about KRE. KRE continues to just bounce along on the anchored VWAP from this low. We've seen this third test. We're still stuck below the declining 20-day moving average with a declining 50-day moving average. And the 50-day moving average, we're replacing this data right here. The 20-day moving average, we're replacing this data. So it's going to take a lot for that to recover as well. So if we see, and this was a scenario I'd sketched out, I didn't short this thing. I want to see what I'd really like to see for this market for a confirmed breakdown that would most likely lead to a test of this low is something along the lines of this, that it kind of gets trapped below the 5-day moving average again, maybe short it here in anticipation of a break of this bigger range right here, which this low right here is that low from yesterday, and have a stop maybe up in this area, because that would invalidate this bearish scenario. With we have the lower high now, some people will want to wait to short down here. I would rather short here and then do what? Well, look to cover some on that breakdown, similar to selling the breakout, covering some of the short into the breakdown. Let's see, TLT had a big move down, and this is kind of the same type of scenario that is setting up in the KRE, in that the daily chart, we were stuck with a declining 20 and 50-day moving average. Here's our anchored volume weighted average price from the October low, and that had started to trap prices along with declining 20 and 50-day moving average, declining 200-day moving average that entire time, trapped below the year-to-date thick blue anchored VWAP. So news and surprises tend to follow the direction of the trend. It shouldn't be much as a surprise. Now, I don't trade the bonds, but if I was short, I would be definitely looking to cover some if it breaks below there Monday morning, because if it breaks below there, the late short sellers, the chasers, and the people with stops below there will get stopped out, and then you're likely to see a little bit of a bounce. And then if that bounce occurs like this, then I think if you're looking to short bonds, you would short here with a stop above that level. and watch it that same type of action continue. Energy names, as I mentioned, we're seeing a little bit of stronger action in here, but it's still range bound. We still see a declining 20 and 50-day moving average, so I don't trust them. When we look at oil itself here, you can see that oil has broken above the anchored VWAP from the April high for the first time and closed above it. So maybe this has a little bit of legs. We'll see. And if this resistance at that anchored VWAP now becomes support in the 72 area. The other thing I wanted to point out was the FTSE. The FTSE 100 is just a disaster here. It's back to a bear market. When you look at the weekly time frame, let me do this. When you look at the weekly time frame, it looked like this market was breaking out past multi-year highs from 2018, and we're seeing the opposite. This is a failed breakout. Now we're seeing it break back down. The first level of potential support is anchored from this low. That's right at about 7,200. And below that is the anchored volume weighted average price from the COVID low, which would bring it down towards about 6,900. Not something I trade, not something I'm really too interested in. Just pointing out that, not everything is a bull market. So next week, I think you've got to focus on the leaders. We had some great winners also, in particular in CLSK. This is a Bitcoin miner. And let's look at the weekly chart there. Just a really nice move from 4 and change up to 6. And some of these other ones also, Riot. You've heard me talk about these the last couple of weeks. Riot has had a huge week. MARA, big week. Don't chase these names. And even some of these little ones that I had mentioned as subscribers, IREN and WULF. Anyways, that'll do it for me. I went a little bit long today. Hope you enjoyed it. Thanks, and have a good weekend.